Good day guys, welcome to our class, and then this is part 2 of IFRS 5 non-current asset held for sale. In this video we'll be looking at the measurement of non-current asset held for sale and also the changes to a plan to sell an asset, and lastly we'll look at disclosure of non-current asset held for sale. In terms of measurement, immediately before the initial classification of an asset as held for sale, the carrying amount of the asset needs to be measured in accordance with the old or applicable standard. We are not going to use IFRS 5, we must use the old standard. For example, if an asset is a plant or a machinery which is measured in terms of IS 16, before we can classify it, we need to first measure it up to the classification date using IS 16. And then, after we have reclassified the asset into IFRS 5, the asset should be now measured at the lower of carrying amount and its fair value less cost to sell. After we have reclassified the asset, the entity, or we should not depreciate it, we should stop or cease depreciating the asset after it has been reclassified. In terms of subsequent measurement, at subsequent measurement, IFRS 5 requires us to look at fair value less cost to sell. Remeasurement, we need to compare the old fair value or carrying amount less cost to sell with a new fair value less cost to sell. Then it means that we'll have an increase or a decrease in the fair values. And then, if it happens that an asset was impaired, we will have to reverse impairment. But if an asset, we are impairing it for the first time, fair value less cost to sell, we are allowed to write down the asset. It means that we are allowed to impair an asset and we recognize impairment loss in terms of IFRS 5. We move from the higher value to a lower value. This could be at the initial classification or at subsequent measurement. Then, in terms of reversal of impairment loss, an entity is allowed to reverse the impairment loss, but it should not exceed the accumulated impairment losses that have been recognized. And then gains, if it happens we have a gain, that will be the increase subsequently in case of reversal. But if we are decreasing or we have a loss again on the asset, that will be our impairment loss. What happens if we have a change to a plan? If the company now decides no longer wants to sell the asset, or the asset doesn't meet our classification criteria, then the company needs to stop classifying the asset as asset held for sale. After we have stopped, it means that the non-current asset held for sale will be taken back to the standard which it was supposed to be measured at, not at the lower of the carrying amount. However, its carrying amount before the asset was classified as held for sale needs to be adjusted for any depreciation, amortization, revaluation that would have been recognized had the asset not been classified as a non-current asset held for sale. And also you need to consider the impairment and then compare the carrying amount that asset would be sitting at if we didn't classify it in terms of IFRS 5. And we compare it with the recoverable amount. Check whether the asset is impaired or not. Up to the date the decision was made to the current period. Then we are removing the asset from IFRS 5. We are taking back to the old standard because there's a change of plan. We are not intending to sell the asset anymore. And then lastly, we need to look at the presentation and disclosure. An entity shall present a non-current asset held for sale in the statement of financial position under the current asset if we are dealing with assets. But if we are dealing with related liabilities, under current liabilities, then a non-current asset held for sale needs to be separately disclosed as a separate line item, and also the related liability, if it's a disposal group, also need to be disclosed separately as a separate line item. We should not set off the assets and the liability. No offsetting of asset and liability. All the amounts must be separately, or single amounts be separately disclosed. Then, in terms of incomes and expenses or losses, they need to go to the statement of comprehensive income. Okay, I think you have enjoyed our video. Thank you for watching. See you next time.